Don't watch Warband. The time chain didn't sleep, and neither did we. It is Sunday, the 9th of August, 2026. Last night, somebody tried to change the rules of Bitcoin. The network answered in 2 blocks, and it never once called a meeting to do it. Start with the anchor. As of just past 5 this morning, Eastern, Bitcoin trades at 64,800, a shade lower on the day, holding every inch of the ground it took back after Friday's payroll miss. Our engine carries it green, standing beside the broad market, the Nasdaq, and gold. The regime reads risk on and pointed up on our read of the InvestAnswers Decision Support System. 2 alerts fired overnight, both at 8 o'clock last evening. Bitcoin printed mean reversion overbought. Ethereum printed the same signal in the same minute. Trend still green, the move now stretched. You know the shape of that by now. Overbought measures how far a thing has run without resting. It is not a bell telling you to sell. Mark it, size accordingly, and keep walking. Now to the thing that actually happened while the exchanges idled. Late Saturday night, Bitcoin split into 2 chains. Here is the sequence, plainly. A proposal called BIP 110, which its authors named the Reduced Data Temporary Soft Fork, asked the network for a 1-year cap on how much arbitrary data anyone can stuff into a Bitcoin transaction. The intent was defensible. There are people who treat this chain as a hard drive rather than as money, and there are serious engineers who want that curbed. This has been argued loudly for 2 years, and the people arguing it are not fools. The proposal set its own activation bar, 55% of mining power signaling support. When the deadline block arrived, block 961,632, the real number was 2.53%, 2.5, against a bar of 55. And here is where it turns instructive. The nodes running that new software had been instructed to reject any block that failed to signal. And pool mined the next block without the signal. The main network accepted it. The enforcing nodes refused it and followed a different block instead. That refusal is the fork. Not a war, not a vote, not a court order. A disagreement over which block is valid, settled by each operator simply continuing to run the software he chose. The breakaway chain produced 2 blocks in roughly 8 hours and then stopped because no meaningful hash power would follow it. This morning, the main chain sits more than 20 blocks ahead. Of the first 23 blocks mined in the new difficulty period, not one signaled support. Still beats parchment. Understand precisely what you watched, because it is the property you actually own. Nobody stopped this. There was no chief executive to veto it, no foundation to issue a ruling, no emergency session, no committee that met in the night to protect you. The change failed for one reason only. Almost nobody chose to run it. The rules of this asset are not defended by an authority. They are defended by refusal, distributed across thousands of machines that owe each other nothing. Now compare that to any other monetary system on this earth, where the rules change when a small number of people in one room decide they should, and you find out afterward. One hard practical note, and I want the Warband to hear it clean. Both chains still validate identical transactions. That means a coin you move can be replayed. Developer Kevin Loeck put out the warning directly. A buyer could take your transaction from the dead chain, rebroadcast it on the real one, and walk away with genuine Bitcoin from a seller who never meant to send it. There is no fork dividend here. There is nothing to claim. If you were thinking of shuffling coins this week to chase something, don't. Sit still and mark how the market treated the whole affair. Bitcoin is down 0.25%. That is the entire reaction. A chain split, once the stuff of panic and week-long headlines, is now a Saturday night that barely moved the tape. That is not apathy. That is an asset whose consensus layer has stopped being a live question. Now, the other half of the week, and this one cuts in a direction worth sitting with. The American spot Bitcoin funds have run 5 and 6 straight sessions of inflows, roughly $850 million across the week. That is the strongest week since the middle of April, and a hard reversal from July, which walked out the door with a $265 million redemption on its final day. Friday alone added another $99 million. Good news, and I will not pretend otherwise. But here is the line nobody puts in the headline. Of that $850 million, roughly $690 million went into one fund, BlackRock's, more than 8 of every 10 new dollars. So hold both truths in the same hand this morning. Saturday night proved nobody can change the rules of this asset. Not a developer, not a mining pool, not a foundation, not 55% of anything. And that very same week showed that most new money now reaches this asset through a single pipe held on one balance sheet in one building. Those two facts do not contradict each other. They are separate questions, and only one of them has been settled. The protocol layer is finished business. The custody layer is a decision every one of you makes personally and remakes every time you buy. A share in a fund is a claim on somebody. A key is not. Saturday night, the thing that saved this network was thousands of people independently running their own copy of the rules and refusing to be told otherwise. That is not an abstraction about governance. That is the same muscle, exercised at the level of your own stack. One measure to carry into the week. InvestAnswers published Wednesday, arguing the crowd has rarely been more sour, and pointing at Bitcoin measured against global money supply sitting at the cheapest valuation on record by their framework. Not cheapest this cycle, on record. Set that beside a network that just shrugged off a chain split without a single institution being consulted, and you have the two ingredients that have historically mattered most. A thing working exactly as designed, and nobody willing to pay up for it. Into the week ahead. Wednesday morning at 8:30 brings July's Consumer Price Index, and it lands into a genuinely unresolved fight. Friday's jobs report was ugly enough to cool the hike talk, and oil near $83 a barrel is stubborn enough to keep it alive. 3 regional Fed presidents dissented last month, asking for tighter, not looser. A hot print hands them the microphone. A cool one takes it away. That number, not the tape, sets the tone for everything on our board. So carry this out of the weekend, Warband. You did not have to do anything on Saturday night. No trade, no vote, no petition, no faith in anybody's good intentions. The rules held because holding them requires no permission and no cooperation. That is the whole product. Everything else we track here, every rotation signal, every gigawatt, every earnings print, is a story about people trying to build something durable. Bitcoin is the one thing on the board that is durable by refusing. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Hold the line. Skål.